Hello there, this is Nick Folks from Drake & Associates with an educational economic update for January 2017. In this month's video, we'll discuss some of the major headlines that influence markets in December and provide some insight for what these developments could mean for you as an investor. Make sure that you stay tuned for the end of this video for a required disclosure statement. In the final trading days of 2016, the market rally we've seen since the presidential election calmed, as all three major indexes posted losses for the week of December 26. Despite this dip, the S&P 500, the Dow, the Nasdaq were each up over 2% in December, and they posted gains for the year, with the S&P adding 9.5%, the Dow 13.4%, and the Nasdaq 7.5%. Arguably, the biggest economic event we experienced last month was the Federal Reserve's much-anticipated interest rate increase. On December 14th, the Feds raised the benchmark rates by 0.25%. which was only the second time they've increased the rates since 2006. Fed Chair Janet Yellen explained that her group's decision reflected the economy's progress and their expectations for continued economic development. The Fed also indicated that they might introduce 3 additional interest rate increases in 2017, up from their previous prediction of 2. Unlike the market volatility after the Fed's last interest rate increase in December 2015, investors had much more subdued reaction to this year's. The VIX, or the main volatility measure, increased somewhat in December, but ended 2016 at 32.2%, the lowest it's been since January. Ultimately, rising interest rates are a sign that the economy is growing. Last month, we saw several indications of this growth, including a final report on the third quarter gross domestic product and the Commerce Department's analysis. They adjusted the GDP up to 3.5% annual rate, showing the fastest economic growth in 2 years. The GDP wasn't the only economic measure that beat expectations in December. Measures of consumer sentiment and consumer confidence both reached levels not seen in many years. Consumer sentiment, which measures consumers' views on current and future state of the economy, reached its highest reading since January of 2004. Measures of consumer confidence also hit a 13-year high, indicating that people feel more positively about business conditions, employment, and family income. In addition to these positive signs, we saw the dollar hit a 14-year high on December 20th and end the year up 3.8%. Crude oil also continued to recover as investors anticipate that OPEC and other producers will begin to reduce the output in 2017. But of course, positive economic indicators don't mean that everything is perfect in the economy. Data released in December showed decreases in durable goods orders, industrial production, and housing starts. We don't like to see these declines, but the biggest economic question marks may not have come from existing data and instead from changes in our political leadership. Stocks have rallied on the hopes that President-elect Trump will reduce regulation and taxes while increasing infrastructure investments. But no one knows for sure what changes could be on the horizon or how Trump's policies will affect trade. As we begin 2017, we will closely watch economic data and political environments. We'll also now turn our attention to upcoming fourth quarter and end-of-year results to learn more about how the economy performed in the final weeks of the year, while closely monitoring what lies ahead. Stay tuned for next month's video. We'll update you where we have annual data to discuss. That's it for this month's Educational Economic Update. We have some upcoming Social Security and retirement classes in the Milwaukee area. Visit wealthwisconsin.com to learn more. And be sure to listen to our Retirement Ready radio show on AM 620 WTMJ, Saturdays at 1 p.m. Once again, this is Nick Folks from Drake & Associates signing off for the month of January 2017. Please remember that nothing we talk about here is a recommendation. If you would like to discuss your personal financial situation, please give us a call at 414-409-7221. We'd be happy to talk with you. While we believe that the information we report is reliable, we can't guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision. Investment advisory services are provided by Drake & Associates, LLC, a state of Wisconsin registered investment advisor. Insurance products are offered through a separate company, Loft Financial Advisory Group, LLC, a Wisconsin insurance agency. Clients are under no obligation to purchase any recommended insurance products.